we Muslims, we give lip service to what we care about and we stand for. But most of our money, 90% of the time, is underpinning the conventional interest-bearing financial system, or it's going to people like Mark Zuckerberg, Elon Musk, and Jeff Bezos, people who perhaps we don't see alignment with when it comes to our values. And that's the fields that are what we are watering, and those are the fields that, surprise, surprise, are actually prospering and growing.
Hello, everyone, and welcome back to another episode of Majlis Markets. As always, I'm your host, Hassan Jivraj. Please, before we begin this episode, remember to like, share, and subscribe, and also follow us on all social media channels as well. But now I'd like to introduce my guest for today's episode, the one, the only, Ibrahim Khan. Ibrahim, Assalamu alaikum.
Wa alaikum assalam, Hassan. It's an absolute pleasure to be on.
Ibrahim, I don't know if you remember when we first met in 2019 at the Nespresso. I think it's closed now, but the Nespresso cheap side, when you were a lawyer, I got to know your story and about IFG and the blog and everything. It was really interesting to find somebody who's like writing blogs and like writing quite in-depth stuff about Islamic finance, even way back like in 2015 when I think you started the blog with Mohsen, your co-founder. But Ibrahim, you've gone on to, mashallah, to do like really wonderful things with IFG and Curate, and you're very well known in the YouTube world and in the like social media world, I would say, within Islamic finance. To kick off this podcast, could you give us like your background story?
Yeah, absolutely, Hassan. So I grew up in the northeast of England. I went to Oxford, studied PPE, philosophy, politics, and economics. And that's where I met my co-founder, Mohsen. And we were both keen to do something in Islamic finance from the very start. And we thought, okay, let's try and basically tool up before we get into the industry so that we can actually do something useful. So then after university, I did a master's in Islamic finance. I did my alim studies, and both of us went into corporate law because we figured, well, look, if it doesn't quite work out, then at least with law, you've got other opportunities and you can potentially pivot away and do something slightly different. God, alhamdulillah, was very, very kind. And we ended up setting up a blog that we didn't really think much of at the time called IslamicFinanceGuru.com. And we continued it as a labor of love for about 4 years. And then when we got to about 2019, we thought, because we were trying out lots of different business ideas at the time, and then it occurred to us, hang on a second, this blog that we've been running really as a side hobby, not even with any commercial intent, maybe this is actually a pathway that we can put on a more sustainable footing. And that's how the whole thing snowballed. And since then, we've been on this, I guess, quite 7 year long journey now with lots of pivots in there, figuring out a business model. And the mission has always been the same, Hassan. It's been all about how can we help our community level up financially. And the education aspect has been at the heart of it. But what we realized was that it wasn't just important to educate people. We actually need to give them investment options that are compelling for them to invest into. You need to lead the horse to the water. We need to make sure that the trough has water to drink in as well. And that's where Curate came in. And, that's been the rest of the journey, building an asset manager that's Sharia-compliant and hopefully, doing some useful and productive things along the way.
Mashallah, that's really great. Rahim, just on this point of the blog, back in, say, 2014, 15, WordPress, blogs, they were kind of the thing before. I would say even YouTube was really like a source of information. And what drew you to writing an Islamic finance blog? You've talked about education, but when did you really think like, oh, let me write a blog about this?
Honestly, it was about trying to synthesize what I was reading and studying myself, because you have to remember at the time I was doing my master's in Islamic finance, I was doing my alim studies, I was working in corporate law. So all of this stuff was coming into me, right? So I was seeing how the commercial mainstream world worked. I was seeing how the traditional Islamic studies and the Sharia, the laws were working. And I was also getting this insight into what the world of Islamic finance was doing. And it was trying to combine all of those three things for myself first and foremost and organize my thoughts that I started writing. And some people seem to find it useful, and geeks like you and I who are interested in this subject, we connected over that. And I think what I tried to do was unabashedly just be quite simple and plain English approach in my writing, mostly for myself again, because I just wanted to make sure that I understood it. And people seem to find that useful, and that's how the whole thing started.
Fantastic. And Ibrahim, like you've been serving or been trying to serve the Muslim communities in the UK. I guess, like to start a more broader conversation, is where do you see the biggest structural gaps for Muslims in this country?
I think when we think about the Muslims in this country, that there's actually multiple facets to this. There's the cultural side, there's a spiritual side, there's a political side. Of course, we think about a lot over here is the economic side. And the Muslims in this country have a certain amount of things that are really going for them, right, in their direction, and they've got a certain amount of things that we need to tackle. So the things that we have in our favor is that we have a relatively young community. A lot of the community, over half of it, is still under 25 or under 30, I believe. So very young population. And this population is increasingly becoming more and more middle class. Like it's no longer the same Muslim generations that came over 60 years ago. It's a little bit more affluent than that, and it's going on this journey of more affluence and more education. If for example, I went to Manchester Met University and I asked them how big is the ISOC, and they said it's about 5,000 students. And bear in mind, when I went to Oxford, the ISOC was about 100, 150 students, and the entire university is only about 20,000. So in Manchester Met, about 25% of the entire population of the university is actually Muslim. And if you go to a local primary school, you'll also see this. The birth rates and the younger generations coming through, they're educated and there's more of them and they're coming through, right? So that is a really strong point. And the reason why it's a strong point is because all of this creates demand. Because when young people go into the workforce and they start working, they start earning, all of this creates demand. The challenges structurally that we have in our community are that unfortunately, when it comes to financial products, there aren't as many financial products that Muslims can use that in the mainstream world people take for granted. If you want to set up a bank that is in line with your values as a Muslim, you can't really do that still. If you want to make investments in a wide variety of things when it comes to, for example, your pension, you can't do that. There's basically just one fund or one company, HSBC, that is ruling the roost there. And it's good that they are there, but of course you want to have that diversification. That's another challenge. When it comes to student finance, you've got another challenge. When it comes to all of the financing aspects that are out there, Muslims again have challenges. So home finance, we have now, alhamdulillah, a lot more options. We've got three main providers of Islamic mortgages, two of which we back. And that's a positive step in the right direction because we need to get onto the ownership ladder, the home ownership ladder. Then there's car finance. Then there's SME finance. So people like Ayan are doing something for the first time in the car finance space. SME finance is still very much a blue ocean that no one has really properly started addressing. And that's not even talking about consumer finance and, things like buy now, pay later and other types of financing. For example, trying to get an extension on your house and getting that financed, etc., etc. All of these various different products that are out there that most people take for granted in the Muslim world, they don't exist yet. And given that the demographics are changing and the UK population, up to 15 to 18% of it will be Muslims by 2050, if we don't have these products ready for them, then the community as a whole is going to get more and more held back.
Would you say, Ibrahim, from my experience, like covering Islamic economy, like I said, since 2013, talking to different people, would you say like the Muslim community, like personally, I don't like using that phrase because you can compare communities, say in East London to like Birmingham, or sure, they have like similar characteristics and stuff, but their economic situation might be different. So like Muslims in, say, for example, East London or Birmingham or Glasgow, they differ, right? So there are different needs for different communities in different parts of the country.
Agreed. I think the broad brush approach isn't always sensible, and I think with all of these things, there needs to be nuance around it. What I would say though is that the Muslim community, about half of it lives in London, and so if you actually do address the major issues of just London, you will actually have done a pretty decent crack at solving a big chunk of the Muslim community's problems. And then thereafter, you've got large populations in Manchester, Birmingham, and other conurbations. If you're going to pick off those two or three main cities, you've actually probably hit about 60, 70% of the entire Muslim community. Now, within that, however, where you do have divergence, I believe, is on religious observance and the tolerance that the Muslim community will have for the kind of product that they're looking for. And I would categorize the community into three chunks. One, people who are very religiously observant and will only go for Sharia compliant products. Second would be those who are religiously observant, but if there is not another option, or if the option is perhaps too expensive, then they will go for the mainstream option. But they would like, ideally, to be using an Islamic option if they can. And then there's a third section which doesn't really care about these things. They might be, nominally Muslim, and they may well fast occasionally during Ramadan, but they, especially on the economic side, they see that as not necessarily where they will manifest their religious identity. And I think for the Islamic finance industry, the first two segments are actually really important. And there is a way actually to talk to the third segment as well. The first two are really important, where you can start with your die-hard fans, as it were, right? Your die-hard customers who really only will use Sharia compliant options. So there's a captive audience almost, right? But if the Islamic finance industry is to grow, then it can't just limit itself to that. It needs to grow, and it needs to offer the right kind of products that are equal when we compare them in terms of features, and in comparison to pricing and rates, it should be roughly equivalent to other mainstream products. Because once you've got an Islamic mortgage and a conventional mortgage, for example, at roughly the same price, then actually that group in the middle that are observant but perhaps not as observant as others, they will go for that because they actually do care about it, because ultimately they are Muslim. The way that you get, I think, this third bucket has become increasingly transparent in the last 2 or 3 years, where even people who aren't perhaps as practicing have realized that their money has a bearing on the shape and contours of the world that are created around them. And they realize that, sure, we might not be talking about religion, but we really are values aligned with certain people, and we're really not values aligned with others. And regardless of religious belief, and regardless of how adherent one is to certain principles, when it comes to ethics and when it comes to values, we actually can find a lot of common ground. And these people, this third group of Muslims, naturally they find a lot of alignment with the rest of the Muslim community, because that's obviously where they've come from. And so I found actually a lot of this third bucket are interested, increasingly so, in thinking about how they can make their financing and their investments more ethical, if not also Sharia compliant.
Ibrahim, you've been writing about this space for quite a while. I've been writing about this space for quite a while. I always tell people, that for me, on like a personal level, I thought the Islamic finance industry in this country was really at a good place in 2012, 2013, when they issued the sovereign sukuk, the debut sovereign sukuk, and then they came back a couple of years, or about 5 years later. But since, I would say 2014, 15, before the Brexit vote and the election of Donald Trump, and some other political issues as well. And in addition to economic issues, there's been a bit of a slowdown, I would say, in terms of the fanfare from the government level of support. I know there's still government support from the UK, but UK is probably within the Western world is probably the most pro-Islamic finance jurisdiction. But would you say that the decade before was probably a better place than where we are now in terms of the UK?
I'd say that when it comes to the government, the support that they have provided it wasn't, of course, it wasn't a great bit of news when the government recently clarified to the Islamic finance industry that they won't be doing another sovereign sukuk anytime soon, and is something that I think will set the industry back. But by the same token, the government has actually been very supportive and otherwise highly engaged in looking to level up the playing field, as it were. And one can also understand why, in this broad program of issuing billions and billions, hundreds of billions of dollars or pounds worth of bonds, why a small bond or a small sukuk issuance that costs more than others wouldn't necessarily make sense. I can get it commercially. Now, on the flip side, this decade, I think, where we are far ahead of previous decades as a community or as an industry, is the sheer number of products that are available for the first time that were not historically available previously. For example, that some of the products that I mentioned earlier, or even on the investment side, companies like Wahid Invest hadn't quite started or got to the UK by the time, 2012, 2013, that you were talking about. Companies like IFG, Curate didn't exist, Nesta didn't exist. So many other products have come along that simply weren't available at that particular time. And then I think the third and important trend here that makes me quite excited about this decade rather than the previous decade is that these products for the first time are being built by members of the community itself. So they are people who are solving a real problem that they themselves feel and they themselves want to address. And naturally, when people like that are the product builders, then ultimately the product, the very small details of it, naturally become a lot more polished than I think we've previously had. It fits a lot more nicely with the exact pain that their customers might be facing. And so that community first, or that community grassroots orient to where the products are now coming from, I think is another area that gives me a lot of excitement. And then of course, finally, I think the technology and the evolutions that we've seen there that bring down the pricing and bring down the entry barriers to someone coming up with a new financial product, they've come down as well. And so for someone building in a niche industry like Islamic finance, which naturally has a smaller market to go for, this is actually music to our ears, because you can make you can actually build a smaller product for cheaper, and it's financially viable for the first time because the startup costs are much lower.
You were talking about fintech and all these newer solutions, but if you talk about like more vanilla things like traditional banks, I know banks are becoming a lot more digitized. You know, you're seeing fewer branches being closed down, things going a lot more online now. But Ibrahim, if I'm being honest with you, like if I just cast my mind back to 2012 when HSBC Armada withdrew from the UK, and obviously its global business scaled down a lot back then, there isn't that many, like the adoption of Islamic finance, it seems very, very low compared to what you're saying in terms of this innovation. Why are these adoption levels very low still?
So I'd say that, well, let's pick up on two things, right? So the first is around the adoption. The second is around Islamic banks. And I agree that if we think about where the progress hasn't been as significant, I would say it's within that Islamic banking space. Now, having said that, I think that some of the recent exciting news that we're seeing about people like Kestrel partnering up with Maybank in Malaysia, or people like Ayan Capital or Stride Up making noises about how they want to be a premier Islamic digital bank, or people like Algebra who already are operative and being backed by people like Standard Chartered. I think these are all welcome, again, grassroots oriented first, new entrants into the market. And I genuinely think that the days of just having a traditional bank are over. I think if you look at the example of Revolut, which is technically still not a bank, but is larger than most banks in the UK today, I think that gives a classic example of how, because everything has become digitized, you can effectively create all of that same suite of financial products and more, and bolt them all onto a single platform, and you don't necessarily need a banking license. So I think that, yes, Islamic banks have not been amazing over the last couple of decades, and that's where the growth has not been as visible. But I think the new entrants are coming in who will inject a lot more, I think, dynamism to that entire space. Now, in terms of uptake, I don't know, what did you have in mind when you said that?
Well, it's because there was a report by Fitch a couple of years ago which looked at the Islamic banking industry in the UK, and given, despite the history and the legislation here and the number of players in the market, both both vanilla kind of banks and fintechs, the actual adoption within the UK is actually quite low. And what's interesting, Ibrahim, that a lot of the people on the saving side are actually non-Muslim. Because Islamic, but if we're talking to talk about Islamic banks for a second, Islamic banks, obviously, they have their own dynamics, right? In terms of like, they lend from their deposits, generally speaking, and not like conventional banks where they can all lend to each other. They can borrow from the central bank. So the cost of funding for them is a lot higher to provide products, right? So their deposits, so the saving products they can offer are usually quite competitive, if not higher than the conventional counterparts. So what you have is like, you have these non-Muslims investing in Islamic banks in the UK, but the ones who want to borrow money or, take products from the Islamic banks are Muslims, are, having to pay quite a hefty premium compared to, say, conventional product. Don't you see a bit of a problem here?
Yeah, I think the uptake within the Islamic banks has been historically slow from the Muslim community, and I would put that down to a few things. The first is Islamic banks, as you know, Hassan, are terrible when it comes to their customer service, their UI,
Yeah, they rank
UX,
really
the
low. They
technology.
rank the lowest, I think.
Yeah, I mean, and I've got the bank will remain unnamed, but it's just such a horrific experience using their app, and like it's you can tell that it's been designed by a budget software house in, I don't know, Pakistan or India somewhere, and someone has designed it who doesn't really speak English properly. It's all very odd. So I would say that that's one of the key reasons why the uptake hasn't been great. The second reason, I believe, is because these banks haven't been grassroots first when it comes to their marketing, when it comes to their messaging, when it comes to their orientation. Now, on the flip side, those companies that are raising money and looking for adoption from Muslim customers, and they are grassroots first. I mean, I speak for us, for example. Alhamdulillah, if you asked us a few years ago, we were raising maybe a few £100,000 a month. These days, we're knocking on the doors of, around $8 to $10 million a month. And that is purely organic. And that's people, a big chunk of which, half of which are all, from the Muslim community in the UK. So Wahid, for example, has crossed over $1 billion in their assets under management. So I think the wealth is there and the adoption is there as well. I mean, Stride Up issued a £300 million sukuk last year. Again, people are keen and willing and able to use these financial products, but the financial products themselves need to be good quality, because consumers are not going to put up with something that's terrible.
One other thing, Ibrahim, I wanted to ask you, just to stick on this UK Islamic finance point, is I talked to Harris Arfan about this and other people as well. Is the economic outcome a lot of these Islamic banking products, traditional Islamic banking products, are still very similar to the conventional Islamic finance. I wrote in an article just now for the Wired Middle East. I'll link it in the show notes, talking about can Islamic finance, influence fintech and things like that. And one of the things I mentioned in the article was that Islamic finance is about principles and governance led, about risk sharing, profit and loss risk sharing, and all these other transparency and all these other things, in addition to adhering to Sharia. But Ibrahim, like I just mentioned, like reality wise, a lot of the Islamic banking products are economic, in terms of economic outcome, are still the same as a conventional. Like I know there are like the likes of Stride Up, which are offering more, let's say, closer to the Sharia. But if you look at it, a lot of these products are still very much mirroring of the conventional. I mean, do you have any thoughts on like why that is?
Yeah, so I think the first thing to be said is I think there are real distinctions between Islamic products. I guess it's hard, right? Because we don't know about what specifically we're talking about. Let's say Islamic mortgages, for example, or let's talk about halal investments as another example. Now, there are very different, these are very different products. So when we think about halal investments and we think about a Wakala product that's innovative finance, ISA eligible, compared to a classic debt product, these are actually very different from the legal perspectives and the risks and rewards associated with it, and from the underlying way that the tax and the legislation deals with it. There's a lot of nuances, a lot of difference. And the same actually goes with Islamic mortgages. There's a reason why when you engage with a conventional lender and you say to them, "Can you offer us an Islamic mortgage?" It's basically the same thing. It's fine. You're doing it's the same thing. But actually, when you get into the nuance of it, it's really glib and easy to say, "Oh, it's the same thing," but it's not. And the conventional lender does not see it as the same thing, and they don't see it as the same thing because operationally it's different from legal and tax and payment flows perspectives and underwriting entire and the regulation. The whole thing is different. And so I think the accusation that these are basically the same things are just completely misfounded, right? I don't think that's fair. Now, if you take a step back, where there may be some value to the argument is to say that actually economically, or kind of, if you set aside this kind of complication, which is just paperwork, let's say, right? Ultimately you end up in the same place as a consumer. Even there, I would quibble somewhat, but let's assume that is the case. I think ultimately where you're going to see a truly what I would call Islamic financial system or a Islamic economy, as it were. You need to have it Islamic throughout the entire system. You can't have it just as a simple product over here that you're trying to make perfectly Sharia compliant. But this halal burger that you've got going is being sold within haram butchers. If that's the case, then no one is going to, people are going to kind of say, okay, well, right, fine, it's a halal burger, but the feeling that someone would have buying that halal burger from that haram butcher, where the pork and the other things are right next to it, wouldn't be the kind of feeling that you want to create. And so I think there is some truth to that diagnosis, but the diagnosis needs to go further, and it needs to say, and this is the direction of travel that we need to go on as a community, and these are the precise steps that we need to go on to go and make this entire butcher shop or this entire restaurant halal. And that way you can actually create the environment where a truly Islamic financial system could emerge. And it starts from things like our monetary system and the nature of money itself. If that in itself is based on the issuance of conventional debt, then we've got a problem, and you're not going to be able to solve the divorce from interest until you solve the very nature of money itself.
Yeah, no, I just wanted to think about this. I'm sure you're aware of it. AOIFI Sharia Standard 62, which is causing a lot of interest, or actually, no pun intended, in the Sukuk market. I mean, do you have any high-level thoughts on what you think about AOIFI Standard 62?
Yeah, I think it's great that the industry and the Islamic scholars are pushing the industry in the right direction. And it's perhaps slightly disappointing that some of the industry haven't been as receptive to it, because they see this as causing a huge deal of work that is going to arise as a result out of this. And they can see that perhaps the banking regulations and tax laws will need updating in order for this to be accommodated. But the reality is, I think that is the direction of travel that we should be heading in. Even but it has to be the case that everything is then worked on, right? You can't just say, look, we're going to have this standard, and this is going to mean that it's a worse tax outcome, or it's a worse regulatory outcome. We can't do it. All of this then actually needs to happen. So I think it's very commendable that there is some resolve being shown by the Islamic scholars to push in this direction, and I think it's important for industry participants to try and actually listen to those Islamic scholars and listen to those experts, and think, okay, if we were to embrace it, how would we make this work, rather than, oh, we don't want to change.
I mean, Ibrahim, like conversely, there was a report done by Standard Chartered very recently, which surveyed about 1,500 people within the market, and they asked, what do you think about Standard 62? 34% only thought it was positive. I've had the privilege of interviewing Omar Ansari, Secretary General of AOIFI, attending the 3-day workshop on Sharia Standard 62. So it's quite interesting to see a lot of the bankers and lawyers. I know you are a former lawyer, so you may have some sympathy towards this, but like when you speak to these guys, they'll put two hats on. They'll say, religiously, we know this is the right way to go, just as like what you just said. But from a market perspective, this is quite a problematic thing. It might impact deal flow. It could lead to more cost in issuing sukuk, and sukuk's not a very liquid compared to the bond market. There's more demand than there is supply. The complexity of the cost and everything, just like you said. And the other part of the puzzle is enforcement. There's not many jurisdictions use AOIFI as law. I think the UAE is the only country which uses AOIFI as law. So isn't there a problem with enforcement here as well as the market perceptions?
Potentially, but I think as the brightest lawyers and bankers who we all have the privilege of working with in this industry know, where there is a will, there is a way. And it gives them a reason to try and win the award for the best deal in the Middle East or the best deal in Europe or what have you, because it's the first time that this has been done. And once it's been done the first time, there was a time when no sukuks had been issued, or there was a time when no sovereign sukuk had been done, and then it became commonplace. So I think we just need to think about it, and the reality is, the structure as the lawyers, they can point out the challenges, but they are also the people who can actually solve these challenges as well. And who knows, in 10, 20 years, we might have the Standard 62 broadly adopted, and
people
just carry on as normal, and that is how business is expected to take place.
I mean, from my perspective, if you look at it, I don't really see a sovereign. Majority of sukuk issuance are from sovereigns, and I don't really see them putting, a bunch of sovereign assets into a SPV, a special purpose vehicle, and then putting it off balance sheet and giving to a bunch of international investors. And at the same time, if you're an investor, unfortunately, the way the sukuk market works today, about 80 or 90% of sukuk are asset based, and they're very heavily correlated with their credit ratings. It's very similar to a bond. But if you're now saying to people, or AOIFI Standard 62 is saying, this is now an asset-backed security-like risk, where you actually have to take on ownership risk of these underlying assets and have to do real due diligence, then it's exactly what you said, right? It's a completely different kettle of fish, and the risk is a lot higher. So reward. So it kind of goes back to this other point, is that, okay, Muslims may want to have an Islamic system, but like when you offer this like asset-backed, very complicated product, do they really want something like that?
Yeah, it's a fair comment. And this goes back to my point around how the entire system needs to change, because I think we have become so used to the debt-based system that we've had over the last, I guess, 60, 70 years, that we don't know any better. But the reality is that, yeah, sure, this guarantee of the guaranteed rent payment or interest payment coming in makes one feel good, but that doesn't actually mask the underlying risk that person is taking. So interest is this weird thing that allows one to smooth over that ambiguity, but the ambiguity actually still exists. And the Islamic way is to, rather than give ourselves this false hope that something else is taking place, it's about dealing with reality and actually fully due diligencing actually what is going on. If I put it another way, Hassan, we have the global financial crisis and the banks got bailed out. We as a government, the UK government, we give FSCS guarantees and what have you, and we say, look, we're going to be the lender of last resort, and we're going to bail out these banks. You have trust in the financial system, and when things are going well, that means that you've got a fractional reserve system which allows bankers to make disproportionately more return and do well. It's this is the gift that is legislated in their favor, that they can print money and no one else can. And when things go wrong, we then bail them out. So we are effectively the backstop for their fund. And when things go wrong, then we have to pick up all of the burden as well. And so how does this link back to the whole thing around sukuk? Well, this links back to the whole thing around sukuk because we have to reimagine how we do finance. We have to reimagine how we do business and investments. And, we're talking about sukuks and the issuance of sukuk and how sovereigns want to raise money to do various things. Actually, we should be thinking about investment. So, rather than thinking about sukuk, why don't we do PFIs, public, finance, kind of partnerships, where you have someone who needs to build, I don't know, XYZ asset, and you get the private sector, the right money in, which is willing to take the risk, but also the decent reward that will come with helping build certain infrastructure. And let's do it that way, where there isn't this kind of smoothing gap that, oh, trust me, I will definitely pay up, and then people kind of take that at face value. Let's actually engage with the risk and do that. But I know what you're saying. It's a big ask, but then the Sharia or Islamic law doesn't tell us don't ask the big questions even if they're hard. It says no, ask them even if they're hard.
Yeah, it's I always tell this story to people that I was at the AOIFI conference in November last year, and during the coffee break I got talking to a guy from the Central Bank of Afghanistan, and he was telling me how everything Islamic is and how everything is great under the new government over there and everything, relatively new government. And I've heard this from other people in countries from like Iran, Sudan, but at the same time, Ibrahim, they'll jump up and down saying they have an Islamic economy, but then at the same time they're taking money from the IMF and being a global citizen. And so I'm just wondering, is this all just like rhetoric, and it doesn't really fit in with what the reality is of being a global citizen within this global economy?
Yeah, I think we need to just do the things that we can. We're not going to be able to change the global power dynamics overnight, and we're not going to be able to change the way that the US currency is essentially the de facto global currency overnight either. There is a challenge, but what I think we should do instead is to imagine what the world could be in 50 years or 100 years, and then work all the way back and ask ourselves, well, what are the steps that this dream that we have would need to be taken in order for us to get there? And then work all the way back and get to our reality today and think, okay, well, what is the next important first step that we can take in that direction? And then start taking those steps. And the thing is that because you're going to be going against the status quo, you're going to be going against the prevailing interests and the prevailing structures, each time that ask or each time that step is taken, it will feel slightly alien. It will feel hard because you're trying to go in a different direction. But that's the quid pro quo. Like if you want a different outcome, you have to do different things.
Yeah, exactly. One of the things that you've done is launch Curate Capital, which I wanted to talk to you about today as well. You launched this. Well, maybe you can tell our listeners and viewers what exactly is Curate Capital.
Yeah, so Curate Capital, if I summarize it, it's we try and water different fields. Our money is primarily either sat in the global financial system, the banking system, into banks, or it's sat within the US economy through the stock market. And most of that is actually sat in tech stocks. And so, we Muslims, we give lip service to what we care about and we stand for. But most of our money, 90% of the time, is underpinning the conventional interest-bearing financial system, or it's going to people like Mark Zuckerberg, Elon Musk, and Jeff Bezos, people who perhaps we don't see alignment with when it comes to our values. And that's the fields that are what we are watering, and those are the fields that, surprise, surprise, are actually prospering and growing. And so Curate Capital is this articulation of, well, what about if we do finance in a completely different way? What about if we take Hassan's money and Ibrahim's money and create those pipes, those alternative new pipes that go to a different field, not the Mark Zuckerberg field, not the HSBC field, but go to the community field where, if Hassan and people living in the UK need Islamic home finance, they can get that. Where if a business wants to grow in a halal way and get growth capital and private equity or venture capital funding, they can get that. And this is actually it's not easy because the pipes just don't exist for us to do that. It was impossible for us 12, 13 years ago, even if we wanted to as a community without institutions like Curate and others coming along, to be actually able to do that. And so that's really the mission of Curate Capital. And we focus a lot these days on Sharia-compliant private equity investing in traditional businesses and helping them grow, because we think that if we want to level up the Muslim community financially, then helping entrepreneurs is a vital part of that, because that's true wealth creation and that's true innovation. And then the other side of it, we've got a number of private credit funds, Sharia-compliant private credit funds, and they provide the funding that underpin a lot of the products that I mentioned earlier that don't currently exist: car finance, home finance, bridge finance, buy-to-let, Islamic mortgages, and a whole slew of others that are going to go live in the next few years. So those are the two things that we primarily focus on today. We deal with high net worth and sophisticated investors from all over the world. We've got about 4,000 investors who are investing somewhere between $8 and $10 million with us on a monthly basis. Alhamdulillah, we've got to over 200 million in AUM, and ticking away, hopefully in the right direction.
So, Ibrahim, is Curate Capital more focused on returns, or is it focused on impact or identity, or is it all three? What are you trying to do there?
Focused on both. So you need to have the right kind of returns as an asset manager. That's just table stakes. It's like a halal restaurant. If you're serving up food that doesn't taste very nice, even though it's halal, then you've lost the table stakes, right? You're going to go out of business. But once you make sure that the returns are right, and then you make sure it's halal, then you have to, the next bit, the real magic is focusing on impact. And that's the thing that we try and do. So halal, proper, commensurate returns that track with the mainstream, and then also really thoughtful about impact as well. So that when, a Hassan or a Khalid or Khatija comes and invests with us, they know that we're going to make a halal, decent return, but we're also going to be creating a world that we really want to live in 5, 10, 15, 20 years' time.
And what kind of investors are within Curate Capital?
So we have high net worth and sophisticated investors. That's down to regulation and the restrictions around that. We have a lot of family offices, charities, endowments, and people like that in the mix as well. There's a number of investors from all over the world. Half of our investors are outside the UK, including North America, the Middle East, Southeast Asia, Australia, Canada. Yeah, so there's a nice spectrum all over the world.
And are they exclusively Muslim, or is it a mixture?
The majority are Muslim right now, but we are actually seeing an increasing number of non-Muslims coming and finding the platform as well, which I think is fantastic.
And is the fund like very catered towards private markets or public markets, or is it a bit of both?
Private markets.
Or why private markets?
So that's where our focus has been from the very start. So part of it is just a product of where we came from, and part of it is also intentional because in order to create, like we talk about public markets investing, halal public markets investing, and all we're doing is we're investing in interest-bearing companies that are not taking too much interest and otherwise carrying on, and they may not necessarily be values aligned. They might be doing all sorts of things. Now, if we're going to move away from that compromise position, then we actually need to create our own large, fully halal Sharia compliant companies from ground up. And that necessarily starts in the private markets. You won't get to the public markets until you have small companies that become big. And so if we're first principles about coming up with real solutions to our problems, then I think sure public markets are important because of the liquidity, because of the scale, but we need to be coming up with solutions in the private markets, and that's the challenge we've taken up.
And Ibrahim, like you put out a post, I think yesterday or the day before yesterday, talking about your returns against the S&P 500. I think, if I'm not mistaken. I don't think you've been doing this. How long has the fund been going? Has there been a like long track record of you guys been doing this?
So the key funds that we have, I would say the GBP Income Fund is the one that has been going for over 3 years now. Our VC fund has been going actually a lot longer than that. It started off as an angel syndicate, so I guess if you include that part of the journey as well, you're looking at about 6 years or so. But in VC, that's actually still quite early, weirdly enough, as you know. So that's been the journey. The GBP Income Fund and the Private Equity Fund and the US Dollar Fund are the kind of key funds today because of our focus on private equity and private credit. And alhamdulillah, they've been performing on track, and they've been growing very nicely from an AUM perspective. We started off at 6.5%. We continue to meet that, and then we raised that to 7.5%. We recently, as the rates have come down, lowered it to 7%. Probably it'll probably bounce around in that range. And I put out that post because I think it's important to just be transparent and reflective with your audience, just because that's how we are actually internally as an investment manager as well. And it wasn't said in a way that was, slapping ourselves on the back, or in a way that was, trying to criticize ourselves either. It's just the way of the world, right? The S&P 500 has had a remarkable year. Will it have another remarkable year this year or the year after, the year after? Who knows, right? Markets are quite cyclical, I actually think. And, I've got some holdings in the S&P 500, or, at least constituents of that myself in my pension. And I'm quite happy to hold stocks and shares. So this is not necessarily a critique of that market. It's more of a, almost like an education to customers that, look, you actually need to have, different utensils for different things. You can't have a spoon and a knife and a fork and try and, do the, tools, try and make do just with a spoon. Like at some point you're going to come unstuck. And who knows, we'll keep on doing it. We'll keep on reporting back, and let's see what 2026 brings us.
And is the fund, or is the funds actively managed, or are they passively managed?
Very much active.
Are you not of the camp that passive outperforms active over the longer period? Because there's some studies done that passive does do better, and especially in the age of AI, you don't think that it will outperform?
Well, in the private markets, it's a different bucket entirely, right? So in public markets, you can be quite passive because it's all large companies, lots of information available and easily accessible that you can programmatically approach. If you're investing in an offer or a Ion Capital securitization or a Stride Up securitization or a private equity investment, that is something, you're creating it, you're making that deal happen because you're having to create those new pipes for the first time. It's a different type of game that you're playing. Once the pipes have been built, right, and become very, very, very sophisticated, and they're all kind of intercrossing and well lubricated and lots of water flowing, that's public markets. And then, of course, you can play all sorts of very passive games, and it works. We're a little bit earlier in the food chain.
Interesting. And generally, Ibrahim, a lot of people told me, like, or and even me writing from articles, like in different countries, generally Islamic funds, whether they be private credit or private equity or public markets, generally they do charge more, and their performance hasn't been as well. Do you think like it's important to balance both, that you have competitive fees compared to the conventional? Obviously, the universe is a little bit smaller, that and the returns have to be good as well.
I would agree that the returns have to be good. I don't know if I agree on the fees. Look, when we set our fees, we look at mainstream equivalents in the private markets and we set our fees to those guys. They need to be competitive. They need to make sense for our consumers. If they don't do that, it's not good enough. But, on the public market side, I know where the complaint comes from is because people are looking at Vanguard, or they're looking at these huge players, and they're saying that, look, these guys are charging 0.0 whatever 5% or something ridiculous like that, and yet Islamic funds that are very passive, they're charging 0.5%, like 10 times more, or it's a significant uplift on that. And and what I would say is, we have to compare apples and oranges. If you've got 1 trillion in AUM and you're charging 0.05, that's still a huge amount of money
Yeah.
that you're making. But I think scale is important. Now, having said that, I do think increased competition in the market is only a welcome thing. And it will drive things down. I think with the advent of AI as well, it helps again to significantly drive costs down. And even the public markets world, I think, will look very different in the coming years, because even mainstream asset managers are now taking an absolute bloodbath in the market at the moment, because people are realizing, actually, with the advent of AI, things are going to change very, very dramatically. So very much in favor of trying to pass on those reduced costs to consumers, and it's coming. But also, let's just be fair to a smaller niche industry.
I know you're not a fan of ETFs too much, but if you look at Islamic ETFs or Sharia-compliant ETFs, the expense ratio is really, really high compared to the conventional. And then on tandem with that, the screening process as well, with ETFs and also with equities as well, just generally, it's a bit skewed across the board, right? Like the different standards, everyone's following different standards, although AAOIFI may be the mainstream one that a lot of people do follow. I know you've commented on this as well, like about the screening standards. Do you have any thoughts on the screening and how that plays a role?
I think it's important that we listen to Islamic scholars, and we adhere to what they say. And we personally adhere with the AAOIFI standards as the largest body. However, going back to the point I made earlier, this is a compromised position, and we shouldn't ever forget that or be comfortable with that fact. And we should be moving towards a world where we don't have to have this compromised position, because we genuinely don't. It's going to take a lot of hard work, and it's going to take a lot of building new companies from scratch, or scaling existing companies to levels that they had never even contemplated. So it's going to be hard work, but I think we need to do that work. And Islamic scholars, when they came up with these standards, they didn't come up with them and were happy with it and said, guys, this is perfect, this is the end of our work, we're off. No, they said that we want you to go on a journey. And unfortunately, I think a lot of our industry hasn't gone on that journey, which we must.
Do you think AI, or even in the longer term, medium to longer term, do you think AI will reduce the cost of investing in Islamic equity funds?
Yeah, I think so. It's ultimately a job of the intellect, which AI can do far faster than human beings. So I would expect it to have a significant bearing.
And you mentioned just now about the screening standards. What don't you like about the screening standards, or what do you think needs improvement rather?
Well, we accept that you can have up to 5% impermissible income. We have 30% debt to total assets, which means conventional debt to total assets or to total market cap. These are compromised positions. When you're allowing in a certain amount of conventional debt, or a certain amount of haram income, then completely understandable why that is allowed. And it's okay for all of us to accept that as well, right? So I'm not kind of saying, oh, I'm holier than thou. We also use, in my personal investing, when it comes to stocks and shares, I will also use those standards. But what I'm saying is that we need to aspire to something greater and take the steps to get there.
I mean, for the likes of you and me, and even I wouldn't say I'm good at screening. Do you think like these apps? I won't name them, but like some of these apps in the US and elsewhere,
Mhm.
they're very good in like screening the different standards, right, and providing judgment views on different investment opportunities, right?
Agreed. I think people like Zoya, Musaffa, Islamically, there's a few others. I think they do a pretty good job.
And then in tandem with that, do you think like there's still a place for robo advisors in the sense that okay, people don't have the time to analyze all these stocks as well as doing the Sharia screening, so they give their money likely to a robo advisor like Wahid or somebody else and manage this money?
I think the role of a robo advisor, I don't know, I might be wrong on this, but I think it's a very tough industry because the margins are so wafer thin and if you get any level of sophistication, and then you either get yourself a financial advisor or you do DIY it yourself. So and they're the ones with the larger amounts of money typically, then everyone else you're left with is typically not necessarily as affluent. And then because you're a robo advisor, you're taking a tiny fee on top of whatever else the funds are taking, which to me, given that the whole thing is being driven down and driven down when it comes to fee loads, it's not a great business. So do I think they're going to continue to exist? I guess so, because people are going to continue trying, but will there be a healthy business? And is it a business that I think people should get into? I don't know about that.
There's one other, two other areas I wanted to talk to you about. The first I know, which is very close to your heart, is venture capital, and I know IFG's early beginnings is very rooted and still is rooted in venture capital. You know, we've seen one of the biggest seed fundings in the Middle East recently with what's called an AI digital native bank, which got 230 million in seed funding. So the company's not even live yet. I mean, just off the bat, what do you think about these kind of like figures for Islamic startup?
I mean, I think it's good if that kind of money is coming into the ecosystem. I think that can only be a good thing. We need to make sure that the money actually, or this bank or this company that's created out of it does well. Because if it doesn't do well, of course, then it's not a great look for the industry. I would also suspect that a big chunk of that 200 or 230 million would be debt financing, given that this is ultimately going to be some kind of bank. And so, whilst the number I think sounds quite big, I actually suspect that it's in the grand scheme of things, it might not necessarily be any bigger than the kinds of funding that we've seen for any other Sharia-compliant lending platform out there that has reached significant size. And I could, rattle off a bunch of them. Like for example, all of the guys that we finance, or we're part of the funding stack. If you get Sharia-compliant senior debt finance there with $100 million, 200, 300, 400 million pound facilities. So I wouldn't take that number with a pinch of salt, not to kind of take it away from them. I think it's great. I think hopefully they do really well, and we as a community should wish them the very best as well.
What can be done to improve the deal flow of Sharia compliant, quote unquote, Sharia compliant startups, whether it be fintech or in other sectors? Because from what I talk to VCs, both Islamically focused and the mainstream ones as well, they all say to me deal flow is the key issue within the Islamic economy. I mean, what can be done to remedy that?
I don't think that we necessarily, uh, need to worry too much about that, because the right investments and the right entrepreneurs will get the funding regardless of how available an Islamic VC is or not. And I say that as someone who is an Islamic VC, I guess, at some level. I think the more important thing is to try and encourage the spirit of entrepreneurship and problem solving within our communities, particularly those graduates and younger these graduates who could be the founders of these companies, and to take those risks. I think if more and more companies and more Muslim entrepreneurs are doing that, that will really help. And then the second thing I'd say is creating that ecosystem, and those who've done well and actually succeeded from our communities, for them to help seed others and also provide that wisdom and that learning to younger entrepreneurs. I think that's the way that we start getting this flywheel really, really turning.
Within the Islamic markets, do you see any countries specifically which have like good VC ecosystems?
Honestly, probably not.
So not like the likes of the UAE or Pakistan or these other countries.
No, I wouldn't say so. I think everyone is doing their best, but you need to get to critical mass. Like who are you competing against? You're competing against San Francisco, London, you're competing against Shanghai, Beijing. The standard is so much higher. And so, I think it would be unfair of me or inaccurate of me to say that actually, yeah, there is a really kind of thriving ecosystem anywhere in comparison to these leading centers of the world.
And then Ibrahim, there was a conference recently held, I think a few days ago at Harvard Business School, and it had prominent Muslim entrepreneurs there. I think the guy who started Replit was there, and most notably Sumaya Balbali was there. And I've done an episode about the whole debacle at Sequoia and with what happened with Sean Maguire. Do you think there's, like very bluntly, do you think there's an Islamophobic problem at a lot of these Silicon Valley or like Western VC firms towards Muslims and Muslim orientated founders?
Yeah, 100%. 100%. And I think this is something that we can try and root out by the kind of campaigning and activism that we've seen over the last few years. But longer term, it's something that we as a community need to address by just creating more wealth. And wealth, can be created without any involvement of any venture capitalists, especially with this, in the day and age of AI, where companies pop off, almost at random it seems sometimes, where they've not taken a single penny of external capital, and then off they go on this journey. So I I think that's really important for us as a community to try and start creating those pools of capital, and then ultimately those pools of capital then need to be funding the kind of things that the Sequoias of the world would otherwise be funding.
Ibrahim, one thing else I want to talk to you about today is that you and your team are really, like, I've got to give it to you guys. You guys are really consistent in content, and mashallah, you guys push out this content. I don't know how you guys have the stamina to put out content on all the platforms, whether they be written or audio or YouTube, TikTok, all of these different platforms. Would you say IFG? We've talked about Curate for the past hour and everything, but would you say IFG at its heart is a content business or a asset manager?
So AFG is the content bit of the business, and Curate Capital is the asset manager. Now, our business model as a whole is for sure much more leaning towards asset management because that's how the business makes money. But yeah, I like to think of IFG as its own little beast, which is very much content focused.
And do you take inspiration from people like Harry Stebbings or somebody like that who's been able to, through a medium platform to build a asset manager or to build like a VC fund to do these kind of things?
Yeah, for sure. I think the world of marketing and content has dramatically changed. And if you are good at digital content, it's just going to be so much more beneficial for you right now and has been for the last 5, 6 years. And I think will continue to be as well. Every entrepreneur, I think, needs to be leaning in on this sooner than later.
And the other key question related to all of this is how do you build trust with your audience? You've been doing this, I think, since 2015, so over a decade with the blog first, and then obviously you've transitioned to the videos and everything. But how do you build trust with the audience?
I think you try and just be honest to the audience. If you have any conflicts or there is anything that gives you somewhat of, a wrinkle, then you should tell investors that or audiences that. And then I think just try and be honest as much as possible and try and add value to them so that they can see that you're someone who genuinely cares about them wherever you find them, right, in their particular situation. And if you're consistent about that, then people seem to appreciate that.
And obviously, one thing I like also is that you leave the comments open, right? So there can be both positive and negative comments there as well, to stuff. And then you're flooded with the negative comments. So
Yeah, yeah,
how do you do
absolutely.
that?
I mean, I guess we just leave them open. It's for people to see how they want to react. And sometimes the negative comments can actually be quite helpful because others will jump to your defense without you having to, lift a finger. Yeah, I think it's just the nature of the online space, isn't it? To have the Twitterati commenting away underneath everything.
Are there any projects you're working on in the next couple of months and for the rest of 2026?
Well, we're very keen to start building much more of a presence in the USA. So that's one of our key projects. And then I think doing more and more private equity. Like we've done one buy and build roll up strategy in the prime pharmacy space in the UK. We would love to do another in the UK and really start to hone our skills and learnings and apply that in a new deal. And then I think more broadly than that, we would love to at some point start having some kind of product addressing some of the issues in the pension space that we were discussing earlier. So those would be the ones that I'd mention.
Amazing. And what's the best way to reach you or reach IFG and Curate?
Well, people can follow me on LinkedIn. I'm quite active on there. Drop me a line through that, or you can reach out Ibrahim at IslamicFinanceGuru.com, and your email will come through to me.
It's really great. Ibrahim Khan, this has been a really fantastic conversation. I'm really glad we got to catch up after all of these years. And really happy to see that you guys are really doing really great stuff, mashallah. And maybe we need to be doing another episode of this in like 6 months' time to see where you guys are. But yeah, thanks for coming on the podcast.
I appreciate it, Hassan. It's been a pleasure.